Thanks for joining us on Squawk. I'm Bruce Whitfield. You're watching CNBC Africa, first in business worldwide. Tonight, Chris Gilmore from ABSA Investments and the independent analyst Ian Cruikshanks join us. Let's look at some of the headlines of the week. And I suppose there is no bigger headline, Ian Cruikshanks, than the huge, terrifying, precipitous 1,213-point sell-off we saw. Was Monday, was it Tuesday? The days blur, but it was a big sell-off, the worst, I think, in 20 months.
Yes, precipitous is right. But, you know, just look how long the mountain was before we got to the precipice. It was a long time, and it's taken until now. You know, people say, oh, the end is nigh. Well, we're still back marginally positive for the year to date. Only marginally. It's hanging about that sort of level. So it's not a calamity yet.
Not a calamity
Yet.
Let's talk about yet, Chris Gilmore. Do you feel that there's a calamity brewing?
No, not at all. And I fully endorse what Ian's saying there. If you look at a graph of this, in fact, what has happened here is it hardly registers. It's a little blip. We are down from the peak, which was a few weeks ago. We're down about 5%.
Yeah.
And we're marginally positive for the year to date. So, look, there is still so much liquidity around locally and in the rest of the world that I would be very, very surprised, touch wood.
You know, it's not real wood.
It's not real wood.
There we go.
If we get a really big blowout on the downside.
Yep. Here we have a situation, though, where the fear of that liquidity being removed is what is driving sentiment on markets. It's ludicrous. The fact that we're as high as we are is because of the excitement of the liquidity. The threat of that being removed sends the fear of I'm not sure whom into us, and markets come off. And I just wish that the noise would go away and we could get back to old-fashioned investing.
Yes, but who is going to pull the lever to cut off the liquidity?
We give it to Johannesburg City Power. They're terribly good at pulling the lever, aren't they?
They're not very good at putting it back up again.
No, but that's the point, and that's what's so scary.
Chairman Bernanke, Federal Reserve, he is the one who's going to do it. Who appoints him? President of the US. The President of the US does not want the voters to turn against him. So I feel that all the talk about reversing quantitative easing and taking, instead of putting in 85 billion, what a number, every month into the markets, it's going to be 60 odd billion. That's still a huge amount, and that should be enough easily to maintain the markets, maybe not at the highest points, but at a high level. And I think all this is going to interact, and politics is what's going to come to the rescue. Just rightly or wrongly isn't the point.
No, absolutely, it's not the point. Markets go up, people celebrate, our pension funds get boosted a little bit.
Yes.
Exactly right. So, do we then buy a market which is looking wobbly, Chris Gilmore?
Look, the market, if you look at it as objectively as you possibly can, Bruce, isn't that
Run!
expensive.
Sorry, was that objective?
No, not a bit of it. It's about a 17 PE across the board. If you look more deeply, if you strip resources out of it, yes, it is a bit more expensive than that if you look at the financial industrial side. But I don't think it's at levels that you would regard as being in real danger a country, particularly given the fact that if you look at where the earnings are coming from, you know, that is supporting this whole...
Historically, earnings are coming from consumer spending, the ability of consumers to borrow, to spend, and to live lifestyles in excess of what they might otherwise have been able to afford. Retail sales numbers for April, 1.9% year on year. That's not growth.
Yeah. It's not growth, I agree with you. And we've now had, 3 out of the past 4 months where you're seeing a decline in that number. And I suppose, yes, you're right. I mean, 59% of our GDP comes from consumer spending. And our manufacturing, even with that dead cat bounce that we had a few days ago, 7% up from a low base, our manufacturing base is really not good. It's not world class and it's not globally competitive on price. So that isn't going to take over. Mining, of course, is in the doldrums. So the question that gets begged, what is going to take over on consumer spending? And the answer is absolutely nothing. So the consumer has to keep on being the workhorse of the economy.
Okay, so here we've got a market trading on a multiple of 17 times, been driven over the last 7, 8, 9 months by industrials, consumer industrials and financials largely. Consumers have run out of tar. Their shoes are worn through on the bottom and there's nothing more to go buy another pair of running shoes to keep on the never-ending tarred road, Ian Cruikshanks. Would you agree on that hypothesis, therefore, with Chris Gilmore's optimistic bid for continuing to buy this expensive market?
I would be very careful in doing that. And yes, crucial word, expensive market. The long-term PE on the JSE Allsy the last 15, 16 years or so is around about 14 times. Now, we're at 17. That means the market is relatively expensive by historical standards. And remember that we are assuming that we're going to have growth in corporate earnings. We may not. And this is the problem. And why I say we may not is that just look at the retail sales. Interesting. Clothing was up a bit. Food, surely a necessity. That's gone ex-growth. Now that is worrying. It means that basics can no longer be afforded.
And the trouble is, the last 5 years worldwide, what companies have done to remain profitable is they've become more efficient.
Yes.
They've taken out, and they've taken, if there was any fat left on this page, it would have been trimmed off and there is just nothing left. So for companies now to start growing earnings, they need to contract their businesses, don't they, by hiring fewer people. We're sitting in this potentially dangerous vortex of decline.
Yeah, I agree with you, and you see no better example than this than in the US, in the US corporate earnings growth, because that's precisely what's happened there. You've seen over the past 2-3 years now, I guess, a secular decline in earnings growth. And any earnings you have had has been really because you've been cutting costs and headcount, basically. You're now in a situation where you can no longer do it, because wherever you are in the world, there is a limit to how much you can cut costs, because you can save yourself into bankruptcy if you're not careful.
Yes.
You know. So now you've got to see in the US, we're starting to see that now. We're looking at a bit of a turnaround there. I think, and that may happen. That may also happen in the South African situation, but it'll be further out.
It may be, but you still want to buy this market. You want to buy, I'm talking about fundamentals versus what Ian was referring to as the politics of markets. The fundamentals suck. The politics blows.
I'm not. I'm not. Yeah, I'm not.
Sure.
I'm not disagreeing.
Where's this conversation going?
I have no idea.
I'm not disagreeing with Ian at all. I agree with him entirely. All I'm saying to you is, as to quote a long dead former prime minister, the alternative is too ghastly to contemplate. I mean, really, what are you going to put your money into if you don't put it into the market? Obviously, you have to be very, very selective, and trying to find value in this market is very difficult.
Well, in a place where people have been talking about value for some time, the resources sector has offered increasingly good value every single day for the last 9 months. Finally, is there real value to be had? Because President Jacob Zuma, of course, stood up this week in Parliament and said, we're going to get heavy with the guys we believe are undermining the basis of the economy. If you go on a strike, we deem to be illegal. If you start breaking South Africa's labour laws, we're going to tighten the screws. Markets like that kind of talk, and we did see a little perk up in the currency compared to the week before, where the president didn't give a convincing argument as to why South Africa remained a solid investment destination. The resources sector, commodity prices are under pressure, currency is weak. Is there value finally? In Impala, for example, under $100. I mean, this they feel like giveaway prices, but they're not give away enough just yet.
I don't know if there's necessarily value in Impala, but I like platinum as a metal. And that platinum ETF, for example, to me actually looks quite good if you're going to take a longer term view of things. And let's bear in mind that the platinum producers, or should I say that the platinum price is derived, really, is being driven, I think, by the supply side. The supply is getting compressed. We are in a situation last year where we had a slight deficit there, although we're still in total looking at a bit of a surplus there. Once that's gone, then I think we could be in a situation where the platinum price will rise up. Do you want to go into the miners? And that's really what your question was. Yeah, there are too many unknowns as far as the mining companies are concerned. They're at very, very deep levels. There's a lot of problems with, and you alluded to them, on the surface as far as the actual workers are concerned. Electricity prices are going through the roof, and it's a very energy intensive industry. I think platinum looks good, but I wouldn't be buying the miners even at these levels.
Please don't say electricity when the lights threaten to go out, as you said it.
And you know, the president said he's going to bring in the heavies, or that's what's understood. And what is he going to do? Bring in the army and say, go understand and bring me back some platinum. You know, there's a whole training exercise that takes quite a long time. and this is going to be quite difficult to accomplish. You can't just get a machine and drop it down. But this is going to be the ultimate response. We're going to find our mines become more automated. They must move that way. And unemployment is going to be an ever-increasing problem.
This time last week, we were talking about the uncertainties around Telkom. Telkom had announced that it was going to be writing down the value of its network. This week, a number came out, 12 billion rand write-down. Jacques Schindler, the financial director of Eskom, beg your pardon, of Telkom. There we go. I'm getting my banks, my service providers all confused. Ex-banker in of course Telkom is saying now that gives us an NAV of 34 rand a share. It's it's our job to get the share price back up there. Is Telkom worth a punt? The share price has had a good week.
Yes, I find it difficult to accept that. We keep on saying, yes, there's hope. They've turned the corner. This is it. There seems to be a great recurrence of new corners that they keep facing and keep on turning and don't find their way. I'm a little bit cautious. No, I'm very cautious about that.
You're very
buy
cautious.
it.
Do you have hope in Telkom? You've had a week to think about it and percolate the news.
You know, I must admit, I think Jacques Schinderhutter is doing a great job, and I think, when was the last time you heard anyone from Telkom even remotely referring to the financials? So that is a very, very good sign indeed. You know, in the past we've heard all these wonderful stories about, well, we're going to take over Nigeria and CDMA, never mind GSM, blah, blah, blah. It was rubbish. But at long last, they appear to have turned the corner. I have to agree with Ian, though. I think you've got to be very, very careful on this one. And as I've said on many occasions and on this programme before, they have neglected their own backyard.
Yeah.
And what by that, I mean their huge copper installed base. If they were to actually use that properly and to really get a lot more people to actually use ADSL, for example. And by the way, you know, they've got a lot of adverts out there now. There's some good deals coming through from Telkom. I think they're trying very,
It's
very
only
hard.
a good deal if you can get it installed and serviced.
Yes,
Yes.
no,
Yes.
and therein lies the problem.
Two
Yes.
big points there. And you know, the future is in data supply and in mobile phones. They gave away their gem in the mobile sector and tried to get them to deliver on the data feed side. It's not very easy. No, in fact, it's not that. It's very difficult indeed. And the regularity of service is not good.
Ian
So
Crookshanks,
that's why I'm...
should Chris Gilmore be quaking in his boots? And I ask you this question because he's got a new competitor. Ashburton Investments. We've known Ashburton as the offshore investment arm of First Rand. Hasn't done particularly much. I think lots of South Africans in other times took money and put it with Ashburton offshore, but Ashburton has cleaned up its act, consolidating the various investment arms within the First Rand Group, 110 billion rand in assets under management. Suddenly First Rand is back in the investment game after unbundling Momentum. Should he be nervous? He doesn't look that frightened.
No, but I think he doesn't look that frightened. But I think to an extent, any competitor, particularly one backed by FNB, who do have a record of banking efficiency, I think this is important. So I do believe that it's going to make that area more competitive.
Are you quaking in your boots?
Do I look like I'm quaking in my boots?
Well, you're a very good actor.
No, look, I agree with Ian. Look, it's I think what they're doing is very clever, putting all of those together and getting the best of breed. But it's going to take a lot of marketing. It's going to take a lot of getting recognition out there as to what's going on there. Because I looked at it, and I have to confess, I was very confused when I saw this. I thought, well, this
I
has been
spoke
around
to
for a
the
long
chief
time.
executive, and I was more confused once I'd
Yeah.
spoken to him when that
There's
finished.
the answer.
Yeah.
That's right. So I think there is going to be that confusion. Until they eradicate that confusion, I think it may be a little bit problematic.
But there is nothing simple about setting up an investment company.
Yeah.
I mean, it is massively complex. You're taking corporate cultures, you're taking BJM, which has been through more management changes than there have been sunrises. Certainly it feels like it. FNB bought it, then it sort of sat in obscurity. But there's a nice private clients business in there.
Yeah.
Ashburton's got a nice base. RMB Private Bank's got a decent customer base as well, with some Tom to invest. But you've got to wed corporate cultures and all sorts of stuff, and that stuff bizarrely does take time.
It does take time, and look, I wish them the absolute best. I mean, and I'm sure they'll do well, but it will take time.
CVs from Chris Gilmore appearing. No, we joke, of course. Sorry, we don't. It doesn't mean it. Chris Gilmore and Ian Crookshanks, more from them in just a moment. We look at how your money paid for the e-toll award. Yes, we looked at that last week, didn't we? But of course, there's lots of controversy around the whole e-toll issue now, with Kapsch, the Austrians, disclosing in a press conference how much money they're going to make from us. This was a Bloomberg report. Well, no clarity from Sanral other than the report was thin, the journalism was poor, it's not accurate. Well, we have the accurate story then. We'll hope to sort of pick at this tale over the next couple of minutes. Plus,